In our last video together, we talked about how we thought Wall Street was buying the dip. The reasons were simple: dark pool liquidity and the most traded zone. But in today's video, we need to uncover the data surrounding these types of dips and what they mean for us as investors and traders. With record inflows into the queues over the last 24 hours, well, there's a lot to discuss. And that's before we take a look at where the big money's going and, of course, the FOMC and earnings season kickoff of the biggest tech stocks. Guys, there's a lot to cover. Let's get into it right now together. Stocks, commodities, and cryptos. Let's do it. Well, welcome back, everybody, to The Daily Show. My name's Tom, and today we have a lot to discuss because the data of this bull buy is very important to analyze. More importantly than that, though, we've seen some pickups ahead of earnings season, and the FOMC is just 24 hours away. So what actually happened over the last 24 hours? Well, we saw everyone buying the dip. Retail, hedge funds, and of course, Wall Street's biggest algorithms were all at it. And one of the reasons why this is animal spirits. Everybody is incredibly bullish when it comes to dips, and in some ways rightfully so. But it reminds me of a period back here in 2021, which actually was the marked high of stocks such as RK. Could this be the end of AI's rich valuations and instead a rotation moment from the market? Well, in some ways, I think it could certainly be that way. And of course, to break it down, we've got a great article here about the latest DeepSeek information and the revelations that people are having. Now, I'm just going to tell you a couple of things that I think are probably the facts. The first one is the timing was pretty legendary. Obviously, they're doing it into Chinese New Year, and it will circulate around the world and already has, and this could bring a lot of bulls back in favor on the Chinese markets. If you think about it, everyone's been short interest, it's record highs, and of course everybody's been outflowing from that market as quickly as possible. But could this be a turning point? Well, certainly it could be, but I don't think they built it for $5 million or possibly even the way that's been said. I think the reality here is that it is absolutely a great model. Everyone I've been seeing, PhDs, doctorates, people that absolutely know what they're doing, they've all said that DeepSeek is pretty phenomenal, and it's certainly an evolution of where we're at in the AI space. But for you to think, or for any one of us to think, that we're not going to see many of these over the next coming years is, of course, stupid. We'd have to believe this is going to happen, and we already knew that computes were eventually going to come down. So does this take away from the semiconductor manufacturers, or does it actually bring more hype into them? In some ways, I think smaller businesses and middle businesses will now be able to potentially compete. And I see that as a bullish sign for pretty much everything at this stage. The biggest question now will be, how do you actually protect your IP when it comes to, of course, AI? And I think that's going to be the one that's really tough over the next decade. Now, speaking of this year, we've just entered the year of the snake. So happy Chinese New Year for anyone that does follow it. However, look at this. The snake is actually the worst in terms of market predictions, and it only respects about a 0.8%. So just when you thought 2025 couldn't get any weirder, it certainly has from this stat. And you can see here, Ryan Detrick has gone through it all and kind of tracked all the information we know. And it basically has a coin flip chance of being bullish or bearish. Now, that's a lot worse than any other year that you usually look at. Most notably, 2001 was one of the worst years. And of course, it sounds familiar when you think about AI bubble or tech bubble. Let's now go through some big dark pool activity. Of course, we've got here some large trades coming in from Taiwan semiconductor manufacturing. And you'll notice that they were all near the low. Since then, price, of course, has regained above that. We also respected the idea that Nvidia was probably buying the dip in our previous video by sharing this little tidbit here, which was a monster trade coming in right at the end of the day. We've since seen another huge trade, though, coming in just at the close here. Was that a take profit ahead of earnings and FOMC, or is this just another buy where basically the algorithms are saying, you know what, I'm ready to continue to take this thing back up and fill some of these gaps? For now, I think you've still got to be bullish on the markets. And yes, your eyes are not blurry. This is a blurry chart. But what this actually is showing you is the forward returns for all of these massive 4% intraday sell-offs on the NASDAQ. And you'll notice 12 months later, only 2 were down, and they were down big, don't get me wrong. But some were actually up quite a lot. And in general, you've got to look at these dips, especially when we're still in a pretty strong animal spirit. as being positive. And I'm going to explain to you why that is. Why do we have to still be positive on these markets, even with rich valuations and things that don't even make some sense? Well, it has to do with market structure. For a long time, I've talked about how the easing cycle, the way that the Federal Reserve eases, it's not even so much about them. It's about how does the market structure up. If the market follows a similar curve to the upside here, then generally that means that we're in what we call a soft landing narrative for now. If the market starts to sell off post, of course, easing cycles, you're generally in a recession or something even worse. So if we take a look at the closest to resembling right now, we've got 2022, we've got 2016, 1988, 1994, and 1966. And you can see here we're right smack bang in the middle of all of these. So basically speaking here, we have a pretty good soft landing narrative for now. The other thing is we've got pretty good breadth. The S&P 500 excluding tech made an all-time high the previous 24 hours. And obviously that's important. It shows you that there is rotation in these markets. We also know that usually bubbles go on longer than people expect. And boy, oh boy, are we probably in a bubble. Although when you say the word bubble, it's usually not the end. Why do I say that? Well, remember that 2021 chart from just before? Well, it turns out that 2021 was where we saw the rise of course, businesses that made no money and everyone was buying them. That also coupled with huge animal spirits. Everyone was buying calls. And this was a huge deal. Of course, call to put ratio went to the highest ever recorded. And we're getting close to that here in 2025. I think it's a very important chart to continue to keep in the back of your mind. And it generally proves that we've only got a little bit more left in these bull markets. Maybe that's 10, maybe that's 15%. But when everyone gets bullish, you do need to be starting to think, well, are we at the end of that particular cycle? Now, speaking of, are we at the end? Historically, no. We got one all-time high this year. Usually there are more to come. 97.2% of the time, there are more all-time highs to come. And the only point that didn't happen was 2022. So the stats are pretty good in your favor. In terms of why the Chinese New Year and the timing of this DeepSeek information is so important, have a look here at the China ETF. You can see here record outflows. We obviously reported on this a few days ago before the information came through. That usually coincides with dip bottoms. And of course, we also see record short interest. So could there be a squeeze as the markets open next week? There certainly could be if more and more people turn bullish on things like KWEB, HSI, etc. We'll look at the charts soon. What about the US dollar? Well, we've already kind of shared with you that we think the US dollar may have topped. The data points towards yields down, US dollar down. Obviously, this happened last time with the Trump election victory and what happened during the period that he was president. And of course, it's kind of that normalized structure. Now, will that affect the S&P 500? No, not directly. In fact, the stats are that the US dollar and the S&P 500 are not really correlated anymore. What is probably going to help is a couple of overseas markets. So in particular, you're probably going to see gold do pretty well off this, which is of course one of our favorites here on the channel. And you may also see China's policy be, pretty accommodative towards this. This is actually kind of what China needs to get the bullish market going back on. It's the nature of what they're doing with their stimulus at this stage. So a weak dollar could be good for China indeed. And that's of course got another bullish catalyst for it. Now, speaking of bullish catalysts, we're in earnings season and we've got the FOMC. I mean, this is a huge 24 hours and you guys can see the options, expected moves, plus or minus. And then, of course, we've got some massive ones here as well from Apple, Intel, and many other things. So is this an important moment? Yeah, it's probably the most important area, 2 days of earnings season, and we'll be reporting on each and every one of them. So make sure to come back tomorrow as we cover whether this market can hold up structurally. In terms of inflows and outflows from the crypto world, no expectations to have inflows over this date, which was, of course, the 27th, because the markets were down. But overall, just remember, 7-day inflows still very good, and markets are still holding structure. Now, let's talk about the major market, the Qs and the S&P 500. Firstly, the Qs have held up very nicely so far. Have they filled the gap? No. Did they fill some of the gaps on the way down? Yes, some things were filled. So, of course, if earnings comes through with the goods, that's going to be important. When we take a look at the SPX, though, it was really the key level. I mean, this was a phenomenal zone. 59.50, 59.20. Of course, we talked about 59.50 being a put wall. We'll take a look at the new ones in a moment. And we're approaching another call wall, just before the earnings event. So let's take a look at that together right now. 60.70 over the next 24 hours is the major call wall. So this is going to be a huge level. Then we've got 6,000 as the put wall. So basically, if the markets go bad and they don't like what they're seeing, 59.20 and 6,000 will be the two areas that you want to be focused in on. The other thing that you're wanting to look at here is if we do get through 6,100 in the future, of course, strong positive gamma, and every sign pretty much looks to 6,200 at that point. You can see here, it is the most bought strike moving forward with all expirations. Remember, always look at all expirations as well. We've got here 5,900, 6,000, and 5,800 as the major put levels to also be looking at from your structural buys should we get back down into those levels. Let's now have a look at Nvidia, almost back in positive gamma once again, just needs to get past 130. And as we know, we've kind of got that strong base down at the most traded zone. So a lot of things that we're looking at right now in these markets. Let's now jump over to the charts. What have we got? Slight uptick in risk here when it comes to what's going on the bonds and the options flow. So basically, it looks like bonds are getting a little bit more risky over the last 24 hours, but nothing to be concerned of just yet. The VIX dropped, which we had to suspect because it was by the dip. And remember, financials are up. And when financials are doing that, usually it's a good sign. Ahead of the FOMC, we're at the critical point of support for the US 10-year. I'd like to see the 10-year drop through. I think that will be, in general, considered a bullish catalyst at this stage. And obviously, if that happens, we have to expect the US dollar to also drop. A break below 106 will be, I think, a huge trigger point for a lot of big algorithms to say, you know what, that may be the high for the dollar for now. And if that's the high, then of course gold could go up even more. Look at this beautiful consolidation ahead of the high. That's exactly what we want to see. I don't mind if it sits here for a week before it breaks through, even better. So nice pullback in time here for gold just before the highs. We're still bullish on gold. And of course, therefore, we're still bullish on silver, but we need silver to break through 31. We've got the alert. We'll set it when we get it. Speaking of alerts, we've got 75.20. We know this is a key zone for US oil. It's going to probably find buyers here, but nothing really just yet. And Tesla's stuck ahead of earnings. So if it breaks down, could go to 330, 340. If it goes ballistic on the upside, I'm not sure that's going to happen. But anyway, if it does, then we could be looking at 460. I think there's some big inroads going into. It's all going to be about forward guidance. Let's see how that looks with the new Model Y and what people are showing in orders, etc. Let's move over to Apple. A lot of buy the rumor. Are we going to see a sell the fact when earnings comes through over the next 48 hours? And semiconductors continue to hold right down in these lows. So I think that's really important to note. If we have a look at Nvidia, obviously it bounced up quite a lot off the most traded zone. Excellent buying opportunity on the day. I mean, it was a sweet level. So if you managed to get that, fantastic for you. And it rallied up 9% on the session. Now, is this a dead cat bounce? That's what's going to have a lot of people worried. This is a Wyckoff, technically. If it does rally, there could be sells here. There could be sells all the way through this area. For now, I'm going to use a fib. So look at the 61.8, which is pretty much going to give you around this zone. And I would expect the market to at least be able to rally up here. If it then starts dropping, we got problems in the AI space. So for now, it's all green, all good, but we need to keep an eye out for that problem if it does occur. HSI continues to strengthen. Of course, Chinese market's looking good, and US 2K is consolidating very nicely. It's still in an upward trend off its recent selling. NASDAQ in the middle of nowhere, obviously waiting on the earnings results. If you're bullish, there's no problem with it. If you're bearish, some people are going to look at this and say, I want to sell it, but yeah, it's a very, very tough zone. All you're really doing is saying, I'm going to sell the golden pocket, which is the 61.8 area. Do I think that's strong enough? It's a good zone, but it's not what I would call an incredible replication area. So we're at that critical zone just before the earnings. We still remain bullish, at least in terms of the stats. Speaking of bullishness, Ethereum is barely bullish. It's only just holding above 3,000, which is important. 3,450, 3,500 is a huge level. I'm really excited about that. But for now, it's just kind of like, we'll see what happens. Bitcoin, doing exactly what you'd want it to do. Holding those levels, guys. That is good. Consolidating near the peak, nothing wrong with that. So similar to gold, actually looks kind of similar in some ways. Needs to hold up here. You do not want it too much lower. So we don't want it to go back down here. Then it starts the Wyckoff narrative. So let's hope that if you're a Bitcoin bull, that it can hold up. In regards to the news coming forward, we've got the FOMC statement. press conference and everything else there. And guys, remember, if you are lucky enough to be in Perth or Brisbane, Australia, make sure to come out to our events in February. They're completely free in this case. We're doing them. We're going to be sharing some absolutely amazing information. I've got an excellent speech that I think everyone's going to get a lot of value out. So make sure to make it for Perth and Brisbane. If you can't, well, hopefully we can come to your area soon in 2025. Also follow us over on X and check me out on LinkedIn as well. I'm posting a bunch of psychology-based stuff for traders and investors this year. I'm using that platform for it. Thank you so much for watching. Subscribe, smash the bell. We'll see you tomorrow with a whole bunch of information because the FOMC earnings season, it's all here. And this next 48 hours, it really matters. Catch you guys.